Hey there, traders. This is Shane, and I've made a couple of posts regarding some trades in the pound US recently. And one was a short that got stopped out and then went merrily to my target. And another one was regarding a trade that I was trying to get long in the pound US. And this is that trade here where you see price came down. This is the order right here. You can see it placed up here as well, just so you know. It doesn't stick this in here. Price came down, barely missed getting in, and then triggered up. And this yellow line here was represented 2-to-1 reward to risk ratio, where I would have taken some action on this trade if I had gotten in it, and I didn't. And then what happened again later on is price actually came back down again and missed my area one more time by a handful of pips. And I'm not going to go too much into this trade because I did cover it in the article called to chase or not to chase. But one thing I said is this, in the end I canceled the order and I'll look further down for an entry. That was to go long. Price could again come to the area and fade a great distance. Well, that's exactly what happened. Price actually came down to 3 pips below the price that I had originally had to go long at, and price rallied up and traveled a good distance. It would have got me my profit targets, but I didn't chase and I stayed out of that trade. Okay, so that's just saying this is an older chart. This is a few days ago, or yesterday, or the day before, one or the other. Anyhow, so as price rallied up, I said to myself, okay, you know what? Both are on the table here. I can go short or long in this pair. I just got to find a decent spot for it. Now this is the daily chart of the pound US, and down here, it's just an area where you kind of could expect there to be a nice little bounce in this market. Now, this is for me, okay? This is not, these are not trading recommendations. You're going to trade what you're going to trade. And I also had a few more lines marked off here that I liked. I said to myself, I could actually take a short in this pair because I do have some room to the downside here. This was just another area that I had marked off up here as well. But as price had broken through here pretty solidly with this candle right here, and you got this little pocket of action right here, bulls and bears fighting it out, where obviously who won? The bulls. Price comes down, retests this area, goes back north, breaks through. We always talk, you always hear support equals resistance, resistance equals support. Yeah, sometimes that's true, but I don't know if I want to use that as a blanket statement for myself anyhow. So what I was looking for was if price came back up in this area, I'm going to show you in a 4-hour chart what I was looking at. Maybe it's a good spot to take a short play if something sets up. All right, so let's look at this, the 4-hour chart. And this is the area I'm looking at right here. If you just take a look here, if you scrunch this up a little bit, you can see the price dropped here. It's kind of basing around here, and you have this big spike up here. But regardless of all that, what happens here is this big drop here. Now you can see probably why this spike happened right here, right? As there's orders in here, because the price had rallied and then dropped, so you definitely know that there are some orders there to sell, right? Price comes up, you can see it just barely, let me just see if I can get a line on here. Yeah, I guess we can do this. It just barely touches into this area right here, fades, right? So this is what I was looking for. If price came back up into this area, there's got to be a place that I might want to take a look at to short. And there was, and it actually sets up today, and I'll show you that on the 15-minute chart. Here it is right here. Scroll back just a little bit over here. You have this little congestion here. Price dropped. You see right here, there's some congestion, right? Some sideways action, some basing, right? This is the morning time on the 6th. All right, so a few days ago, right? So price had stayed in this little area for a while. Big red candle out, and it's kept on dropping. So I marked this area off. I said, you know what? I'm going to look at this area. When price comes back into it, I'm going to take a short. Why? Well, because I have this turning point up here, right, where price had rallied up, and you can see this spike again, right? These spikes are they're all over the place. And let me just get this thing here. See this spike right here, right? Where obviously what happens here is what happens. The bulls come in, pushing price. And when they hit 6,200, right, the psychological level, boom, price fell, right? It doesn't matter if it's a psychological round number here. That's not why price fell. Price fell because, there was more sellers than there were buyers in that area for reasons only they'll know why they were there. Okay, so this area here, I'm looking to short when price comes back in to this area. So we scroll over here. Let's move over here. That's the same blue line. Right. Oh, hello. 1 second here. Try to scrunch this up a little bit. There we go. I don't know if that works a little bit better. Nah, it's not. Well. Anyway, this red line is actually where the stop gets placed. And it equaled, I said 15 pip risk here. I think it's actually an 18 pip risk. And basically, I'm looking to shorten this area right here. Here's the top of this little mess right here. Obviously, you don't want to put your stop right there. I put it up here. And I'll show you that on the actual broker chart in a second. So price rallied up, and it rallied up really, really nice. As you can clearly see, price rallied up strong right into that level that I had marked off. Pushed in and then dropped like a rock. Now this whole trade set up with a 114 pip profit potential with an 18 pip risk. The shorting price was 6074. My actual exit's right here at 59.69, and I'll show you that in a second. And the reason why that is, it did eventually get down to the full target, which is right there. You can see it just kind of pokes into that level right here. Was because when I looked back at the chart, I had seen this big thrusting candle down, and it kind of stalled. And when it stalled, price rallied up. So you can see price starting to rally up right here. And there just so happens, pick up some orders, and up they go. And clearly what happens here, it's selling off again. But, hey, you know what? Whatever. It equals a 105 pip profit on this. So risk reward of 1 to 5.8. Not bad, right? Considering the other trade that I had, which I'll show you in 1 second, it stopped out with an 18 pip loss. And I'll show you that. It was an article I had made previous where I was talking about where price, you pick the area, it's a good area, you go short, price rallies up, takes you out, goes a little bit further, and then falls like a rock, right? We've all had that happen to us, right? So we'll see that in this chart that I'm about to bring up right here. This was that short I talked about where I went short and stopped out on the spike, and then price just boom, it plummeted really nice. This is the area that I'm looking at. I hope you can see it on this. I'm sure you can. If not, let me just do a bit of a highlight here. That didn't work. That's kind of ugly. Let me try this one. There we go. So there's the shorting. You see, just kind of pretty much, pick the top on this rally up. And for those people that are out there that say, don't pick top, don't pick bottoms, all that kind of stuff, that's fine for them. There's a lot of traders that trade this way. And here's that exit right here. You see price did spike down a little bit more, almost to the 59.60 area, and started to rally back up at the time of the screen cap. So you can see right here what happened. The price to this is the sell limit. So you see this order was actually in the market. I didn't mark it in. The price that was looking to short out was 6074. Stop loss was 6092. Right, so 18 pips. Take profit was 59.60. Now I actually closed this trade at 1402 on this day right here. Right, and I had gone out for today. My daughter needed a haircut. I needed to get a new cell phone. So just kind of what was going to happen was going to play out. Right, I had my trade mapped out, and if the plan was going to go wrong, I would have got stopped out. And this is where the exit is right here, 59.69, right there. I had originally moved the stop down to 59.78 to lock in a lot, and then I just pretty much 10 seconds later said, you know what, I'm just going to get out of this trade. And certainly you can see what happened on this 15-minute chart. 1 second here, I got to take this stuff off. There you go. On this 15-minute chart, it's about right here. I exit, actually right there, 59.69, as price was kind of hanging out. And it was, what, if you think about it, if you just look at the chart, I'm going to move this line, move this text. Look at this area right here. Got this little congestion zone right here. Bulls and bears fought it out. Bulls came in and drove this price, straight up. So, well, when you see this kind of thing, and prices falling into this area right here, to me it was a logical way to get out, right? It was objective, it wasn't subjective. It wasn't looking and saying, look, price is dropping, let me get out. No, there was a reason to get out. When I did, and so that's it. So this video is actually just as a follow-up to the video to the article. It wasn't a video that I made about don't chase. just in this one right here, where the order was in, price came down, didn't get me in. It actually comes down again, doesn't get me in. I canceled the trade. Actually comes down to the area, actually 3 pips below it. I think it was 59.12. Price dropped down to, and then skyrocketed up to the area where I got this short at up here. So that's a temptation there to get on board a trade that you missed is definitely there. And there's also that whole revenge trading idea in this kind of thing right here. I could have chased this as well, just jumped on. But you know what? It's there's always another train, right? There's always something else coming down the pipe. There's always another trade setting up. And, I got stopped out on this trade here, and in this trade here, I didn't get triggered in, and then look what shows up, another opportunity to get involved in the pound US trade. And, keeping the risk percentage properly, looking at a nice reward to the risk, right? And pip value. This is, say, like I said, 18, and I lost 18 over here. So, it's overall just hang tight, right? Don't chase. And so that's it. So I hope you picked up something from this. I hope one thing I want to really hammer home with, if you miss your trade, just don't jump into it. Just don't say, hey, you know what? I can get on board this trade. I would just mark it in. Don't do it. Because if in a fast-moving market, you're going to pay for that. You're really going to pay for that. And you know what? You missed it. You missed it. Right? That's just how it is. You don't win the lottery every day, right? Same thing happens here. You're going to miss it. And so that's it. Actually, here's where it came down again. Let me just see if I can scroll over here while I wrap this video up. Your first area was here at 59.21. Then
connection lost.
Comes down here to 59.20. And then finally it drops down here at 59.12, where it would have got me in and a nice move up. Whatever. So all that's happened here is buyers get absorbed, and then boom, right? And there it goes. So that's it. Don't chase. Something else will come around. Thanks for watching.